Now let's go over to Colin for a look at the Fox 50. Colin?
All right, Alexis. You know, Nicole mentioned there just a moment ago that we had the earnings out of General Mills, which are pretty good this morning, and the stock is up. So we're going to talk about that. We're going to talk about Citigroup looking to raise rates, credit card rates. Those are among the stories we'll cover now with Yuri Mann, who joins us, financial analyst and a former Barclays Capital Investment Manager. Yuri, good to see you. Let's talk first about General Mills. Thanks. You know, good number, right? They raised their dividend, which we talked about at this time yesterday, and then came out with better than expected numbers for the quarter and in their outlook. Sales a little bit light. What do you make of General Mills stock price, which looks like it'll be up a little bit today?
You know, I'm a buyer of General Mills at $56. Yeah, the other day I had a friend of mine come over. I made her a cup of coffee. I made her an espresso, and I started thinking to myself in my head, you know, if I didn't go to Starbucks this entire next year, I could save a lot of money. And this phenomenon is happening all across the country. People are staying home to eat, and General Mills is benefiting from this. Do you have a favorite ice cream?
Well, it's interesting.
Ice cream flavor?
Well, you know, I'm a big fan of the cookies and cream myself, but since you asked, of course, Yuri.
Yeah. Yeah, well, you know, they own the Haagen-Dazs brand, and they are the largest manufacturer of cereals in the United States. So people are definitely going to be staying home more often and eating. Well, so they're going to benefit from that.
It's interesting. Earlier we talked about the fact that, hey, maybe people are going to move off the labels that General Mills makes and go for cheaper versions. But you bring up the opposite point, which is that instead of eating out, they're going to be eating at home, which is a good point as well. Now, there's the General Mills stock price. As I said, it's up in the pre-market from that $56 price. Let's talk about Citigroup a little bit. Interesting story this morning in that Citi's going to come out and raise credit card rates, right? About 15 million accounts or something like that. Of course, they have every right to do it. But what do you make of this move right ahead of the deadline? Not ironic, I'm sure, that is going to be imposed on this type of stuff.
Yeah, no, it's unbelievable, the timing of this. I mean, legislation is just coming out now to propose basically new regulatory oversight for consumer protection, and Citigroup is coming out and raising rates on its, you know, for its customers. This is sort of like, you know, you think about the parents that tell the kids, you know, when school starts, you're not going to be able to watch TV. So they're all spending a lot of time watching TV over the summer because they know they can. So Citigroup can do it now, and they're taking advantage of this. And you can't really blame them. I mean, if you think about it, you know, they've been hit by the mortgage crisis.
Yep.
You know, second of all, now they're going to have a lot of write-downs because of these real estate loans, and now all of these defaults from their customers who have credit cards.
What are credit cards, and somebody mentioned this to me earlier this morning, is one of the reasons I'm asking you about, are they really kind of the next thing that's going to blow up? A lot of people have come out and said, we're real worried about credit cards. To what extent are you, delinquencies and everything else as we move throughout the year?
Yeah, the delinquencies that generally track unemployment. As you see unemployment suffer, we're going to see a lot of these customers not paying their credit cards, and it's estimated that over 10% of Citicard's customers won't pay their credit card bills over the next 3 months. So that's really dangerous for companies that have, you know, credit card companies, absolutely.
All right, let's run through another stock or two, Yuri, from our Fox 50 if we have a chance. You know, Boeing has been in the news a lot lately. We had the delay, of course, of the 787 Dreamliner again. But now a contract with the Air Force, I believe it's a 10-year deal, $750 million. They're going to provide engineering support for the B-52 bomber. What do you make of Boeing?
Well, you know, Boeing is a company here that, you know, has had a bounce in the stock price. If, you know, I would get out of Boeing at this point. I look at the airline industry and I say, you know, it's going to be hurting for a very, very long time. I was just looking at book tickets to Italy for the summer, and you look at the prices, they're so low, and that's because people are just not traveling. And I see people getting into their car more often instead of flying. I just think Boeing is really going to be hurt in terms of the short term, you know, in terms of the next 12 to 24 months. I just don't see a lot of orders coming in, and if you want to do something that's a little less cyclical, you can look at a company like Rockwell Collins, also an aerospace company, not as affected by, you know, this sort of thing. Yeah.
You own that one, by the way, or no? Rockwell?
Yes, I do. I do own that one, yeah.
All right, so you like that one better. That's why you own it, right? Rockwell instead of Boeing, and we talked about Citi and General Mills. We'll leave it there, Yuri. Thanks a lot for coming on. Appreciate it.
Happy 4th of July. Thanks.
Hey, same to you. That's right. It's a holiday weekend coming up. Yuri Mann there. And outside the studios where we're going next, Shibani Joshi trying to